here for Market Club with your 1 p.m. market update for Tuesday, the 17th of May. Well, here's what's happening right now. The first market we're going to be looking at is the S&P 500. It has a minus 70 reading on our trade triangle technology. And what that basically means is a longer-term trend, which is the monthly, still is positive. However, the weekly is negative, meaning we're neutral on this market. And as you can see, we've just moved out below the level of the Thomson channels. I would say we should be neutral on this market. We may see a little bounce, but definitely neutrality is the key word on this market at the moment. We are going to be looking for a buy signal on the weekly. However, that's not in place right now. We may have to do a little bit more backing and filling before that takes place, and it also may not take place. So again, we have to be diligent in what we're looking at in this market. So this is the S&P. Right now, you want to be neutral on this, or it's in a trading range, and that's how you should treat this market right now. So let's go back to our portfolio, and we're going to look at the silver. Minus 60 on silver. Possible bullish divergence coming in on the Williams /R indicator. There's major resistance right here, which is the 39.50 area, and major support coming in around 32. So we're in a sort of a trading range. We are looking for more of a two-way market. I would say if we see something, I would say the indicator to probably watch right now with this type of market is our daily indicator. If our daily trade triangle gets positive, you could possibly trade it for a day or two, but no longer than that right now, because we are in a mixed sort of market right now in this currency. And also you're seeing a lot of liquidation still from hedge funds who have been long silver, short gold. So let's take this off the screen, go back to our portfolio. And as you can see, silver's down 2.23% and gold's down 1.4%. So again, it's favoring being long gold, short silver right now, and we have a plus 65 on gold right now. It's still in a longer term, still remains positive. And let's look at the chart right here. And you can see we just moved outside of the trade triangle like we did here, but outside the Thomson channel. I would say we're probably going to see some sort of pop back up. And again, the level to watch very closely here is the daily trade triangle. If we get a plus on that, meaning if we go probably over 1502, 1503, I think you should probably be looking to buy this for a test back up to maybe the resistance, which is around 1526. So let's go back to the market. And let's go to crude oil. Crude oil's had a lot of, I just filled my car up yesterday and I was absolutely shocked because I've been away for a while, but we're at plus 55, meaning it's a trading range. We're down over 2% for the day. Let's just go and look at the chart itself. So we're down, if we close here, it's going to be a new low close for the move. However, we're at the lower end of the Thomson channel and the market is oversold with a possible divergence in this. I would say if the market goes back up over 100, and this is a very volatile market, you've had a lot of liquidation in the commodity markets with hedge funds, but you can read quite simply what we're saying on this market as follows with our talking chart technology. The plus 55 chart analysis score for this market indicates that we are in or soon will be in a trading range with no definable or steady trend. A sideline position is best at this time. Okay, so there you have it. But basically, this market's really pretty simple right now. You have resistance coming in at this level right here. So this would have to be a resistance. And then you have support coming in right around this 94 level, which potentially could be broken on the downside. But I think given the fact that we're very oversold, we have a possible divergence, and with the lower end of the Thomson channel, I think we could probably see maybe more sideways action in this market as opposed to a complete collapse. But the trend is your friend. And the trend right now in this market is somewhat negative. So please be aware of that. So let's clear the screen. Let's go back to our portfolio. And I want to, hold on just 1 second. Let me just clear this. It's funny when you're away for a while, you sort of forget how all these things work. But let me clear that off. And let's look at our next market, which is the dollar index, which is right here. And that's actually up today. It's a plus 60, so it's pretty much in a trading range, but we're at the higher end of the range. And this is what I want to show you with the dollar index, because here it is, our longer term trend in the dollar remains negative. And what I mean by the dollar index, we trading the index of the all the various currencies, a basket of currencies. So this is the key thing to look at. This indicator right here. It's the monthly trade triangle, and that's down. The weekly is up, which is meaning we have a neutral position, which is 60 right here. And this is at the higher end of the trading range. And you're also seeing a divergence, a possible divergence on the dollar index. So we have major resistance around 77.50, which is around here. I don't think we're going to see that happen. I think we potentially could roll over here. But there's a lot going on. If you haven't heard about this incredible sex scandal in New York with the head of the president of the IMF, it's sort of affecting the market somewhat, but I think right now I'd rather lean on the technical aspects of the market as opposed to the sex aspects of this market. And I think with a plus 70 reading, plus 60 reading rather, we have to say that we are looking for a pullback in this market. We have a possible negative divergence and major resistance still in place. So let's see how this plays out, and let me clear this off the screen, and let's go back to our portfolio and look at our last market, which is the Thomson Reuters index. Now we're down over 1%, which is a huge move in this market. We're down at 333.30. So let's look at the chart because that tells the picture. This is the most important thing to look at, and this is really under pressure because we've seen just a tremendous amount of liquidation. I want to scope this out a little further so you have a better viewpoint, and there you go. So this closing down here really puts kind of a top on this market for the time being, and I think a lot of this is being self-induced with the hedge funds bailing out of these markets, which they were very long on. And I think you can see this, if I just draw this very carefully, you'll see this sort of rounding top. The Donchian channels have come down. We're at the lower end of the channels, but we're taking out this level right here. One of the cool things you can do with MarketClub is just go into, just do like a line chart, boom, and there it is. And if you look at the line chart, take this off the screen, the Donchian channels, which I can do right now. You just take this off very simply, and we'll take the triangles off as well. So just click here, and we'll take both triangles off. And you can see how we've taken this level and we've broken through it. So I would imagine the potential is for two things. One, if I take my Fibonacci Retracement, which I love this tool by the way, very easy to use, take it down to the recent low, which is right here. And we're looking maybe at a target zone somewhere in the 324, 323 area, which is a 61.8% correction from the highs that we've seen. So that would certainly be a level to look at. The market has taken this out, indicating that we've broken it right around these levels, and I think that's going to be a little more defensive for this market. The market's very, very oversold on hedge fund liquidation. And when that dries up, then I think we'll see maybe a short-term bounce. But hey, lots to look at these markets. Please stay tuned for our show on Thursday at 7 p.m. It's live. We do a full hour show, go into these markets in a lot more detail, and we'd love you to join us. So hey, this is Adam Hewison, back from vacation. Very excited about the markets, lots of opportunities. And I'll be coming to you tomorrow at 1 p.m., so stay tuned.